Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for Monday, February 5th, 2024. Well, we had quite a Friday yesterday, and I'll explain what happened to me on Friday here just really quick. But before we do that, let's take a look at what happened overnight. If we take a look at Asian markets were mostly down across the board. There was a news report saying that the Chinese stimulus is taking effect and things are looking better, but that didn't help the overall index. Shanghai was down 1.02% overnight. The only Asia market that was up was the Nikkei, and that's still doing really well, up 0.5%. If we take a look at our European markets are up across the board this morning, looking pretty bullish, trying to figure out what Powell said during that 60 Minutes interview, but they're trying to show bullishness across the board this morning. And at the same time, we've got U.S. futures looking a little bit on the bearish side, maybe interpreting what Powell said as bearish. We are also seeing bond yields moving up here pretty sharply actually this morning. 10-year bond is at 4.08. The 2-year is at 4.43. So kind of a spike back up here in our bond yields. If we take a look at oil this morning, oil is just ever so slightly lower, down about 55 cents to 45 cents on Brent. And then we've got natural gas showing just a tiny little bit higher this morning. So what does all this mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. To kick things off here this morning, I want to apologize that I missed the Friday report. I've got a little medical issue, nothing life-threatening. Years and years ago, I broke my left foot really badly. I mean, every bone across the top of my foot was broken. And consequently, I've got a major problem going on here as I get older in that foot. And the doctor recommended that I proceed with a surgery on my foot coming up here very quickly. And they just wanted to do some scanning and create some, get some little custom metal jewelry that will be implanted in my foot to stabilize it, hold it together. So that's what was going on Friday. It kind of came up quick, and I didn't realize they would just be suggesting right away I go to that. Now, surgery is not until the 20th, so I've got some time before the actual surgery so they can create the parts. And then I will be right back here. I'm going to miss, obviously, one day. I don't know how the surgery is going to affect me after that point in time. I won't be able to. I won't be able to touch my foot to the floor for at least a month, is what they're telling me, and then it's going to be a long recovery on this. So I'll be hobbling around, but nonetheless, I will most likely be sitting here at my desk. Let's take a look at some stocks that could, well, first off, let's take a look at these indexes. Obviously, we had quite the move last Friday with big tech surging things to the upside. And now, believe it or not, big tech is the Mag 7 is now 33%. 33% of the S&P 500, just 7 companies. I don't think that's a healthy situation for the market, but that being said, we are still very, very bullish on the market, and we're continuing to trend higher. So as you can see here in the diamonds moving up, looking really, really good. If we were to see the bulls continue to push on through, well, we can see there's a little bit of a high up here that we peaked out there on Friday and then pulled back from. And if the bears, if the bulls were to find inspiration today, then I would look for that to break. And remember, there's blue sky above once they do that. No price resistance up there. So keep that in mind. If the bears were to find inspiration this morning, and obviously what Jerome Powell is talking about might just do that. As you can see, we've got a little bit of price support right in there for a pullback into that area. If that were to fail, then I'm going to suggest we might look at the bottom of Friday's candle for a little bit of a test of support and coming back into this trend, or resting out into this trend. If for some reason the bears continue to push beyond that, then we're looking at probably a rather painful pullback, kind of coming back down to test the lows of these candles here in the chart. If we take a look at our SPY, also just a huge move on Friday, new record highs out there in the market. And as you can see, if we were to continue pushing on up, let's look for those bulls to maybe push through that little wick up there. And just realizing above that, it's blue sky above, so there is no resistance in that chart above. If the bears were to keep pushing, as they're kind of showing here in the pre-market, watch right in here for that possibility that they could push us back right here into that little support area, and beyond that point, well, we're probably looking at coming down into here if the bears were to push. Beyond that point, it gets a little bit painful. We'll want to wait and see if those bears engage at all. You just never know. Right now, we're so it's truly remarkable, the willingness of this market to chase some of these big techs higher, and these prices are getting pretty out of control overall. But that doesn't mean we can't go higher. If we take a look at our QQQ, pushing up strongly there on Friday, as you can see, didn't quite make that breakout occur in the chart. I'm going to slide this line up here. You can see we kind of tested right in there, those wicks right in there, giving us maybe a hint of that potential of a double top, or what you might call a tweezer top if they were right beside each other. But as you can see, if the bulls can find inspiration, there's no reason to believe at this point that they can't push through there and go on above to more blue sky highs up there in the chart. And everything would suggest that the bulls are strong enough that they could do that. So let's take a look at if the bears were to engage. If those bears were to engage pulling back here, I would suggest maybe coming back right in to test those lows, the little price support level there in the QQQ. We'll have to watch that pretty closely. And if they were to push on down below there, well, you can see there's a little bit of a gap in here that we could fill. And then then it gets a little bit on the painful side if we were to really push down here in that chart. So watch that carefully. If we look at our IWM pushed up strongly on Friday, but then just faded back. We're still struggling with this resistance level in the chart. And as you can see, we broke back down through here. We've pushed back up. We're testing, not showing a whole lot of energy here. A little bit of bearishness here this morning. Now, if this fails, if this follows through with a down move today, then I'm going to change this line back to red. We flipped through this a couple of times where we went up and held. I went to green, failed, and then failed to hold, and I went to red, and rallied back and proved to hold. I went to green, and now here we are again with that possibility that we could turn this back red, without the benefit of the big tech giants that the other three indexes enjoy. IBM is not showing us all that much bullishness here and showing us even that possibility. If this turns out to be a leading indicator here, what you'll want to notice right there is that possibility that this could end up being a lower high in the market, and we will want to be paying attention to that on that Russell. That lower high could be important to us. Let's take a look at our VIX. Our VIX, even though we have been buying like crazy, it's interesting in here that our VIX has held up pretty well. Holding up here above 13.5 handles in the chart, but there's no particular worry here yet. We've got this little bit of a rally to the upside, but clearly we're not breaking through this resistance up here and holding that. So we'll want to watch this closely. If the sellers do pick up, one of the things that we have to pay attention to is it could be a painful pullback if they do start taking off here, but so far there is no signal to that. So I'd stay long and just continue to raise those stops. Just be really watchful and careful, and be careful not to be overly long this market, because if this were to happen to snap and break, I just think it could go quickly to the downside with a painful move. So just be watchful and preparing for that. Make sure you continue to raise those stops and don't get overly long. If we take a look at our T2122, our T2122 indicator, interestingly enough, after that push on Friday, we ended up pulling back here just a little bit. Now what this means, remember, this is a 4-week new high, new low ratio. What it means is there were actually more stocks selling off on Friday than were going up. And so we pulled back here a little bit. Now we're still above our 50% area, so that's no particular worry in here, but it does show us that strangeness that we have in the market right now, where we can continue to surge higher and higher and higher based on just a very select few of stocks, when we had the majority actually pulling back on Friday. So interesting market condition in here. Now what this does tell us is if the bulls can find inspiration here today, we certainly have upside opportunity in this market, so nothing to worry about there. If the bears can find inspiration today, well, then of course that possibility that we could slip back down into this region. So we're pretty close to 50-50 here right now on our T2122. Your guess is as good as mine which way we're going to go in that move. If we take a look at our T2108, now T2108 continues to show that little bit of pressure here on Friday. We're continuing to see more stocks selling. The percentage of stocks below the 40 slipped on Friday, which is kind of odd when you consider how much upside push there was in those tech giants, and making it appear like everything was great in the market. Now, is there any particular worry here? Well, not terribly. Notice that we've got some resistance here around that 50% area of the chart, and we've got some support down here in this area. What will probably cause some concern in the market is if we were to start pushing this down below that level. That might trigger some computer selling out there. The CTAs they're extremely long. The market, and the CTAs could maybe start triggering to the downside. In fact, Goldman Sachs is warning of that possibility right now, that the computer system out there in the market is so excessively long. Watch carefully for that possibility of a pullback. So we'll see if they're right or wrong on that. I don't know. But if the bulls find inspiration, then breaking back above this 50% area would probably go to say Goldman Sachs doesn't know what they're talking about. They're wrong. If we take a look at T2107 also pulled back here on Friday, but not so much to be a major concern. This is a percentage of stocks above the 200-day. Notice right in here, we've got some price support in this area, so we're holding okay in here. I don't see any major issue. And then, of course, that 50% area is kind of a psychological area of the market. Breaking down below that might raise a little bit of concern here. But if we can continue to see the bullish inspiration in here, let's look right in here. We've got some price resistance in the chart right in there to pay attention to. Now, T2101, this is something that I've been talking about for a long time now, and this is the fact that our market breadth has been continuing to be weak as we continue to move up and up and up and up. Our breadth in the market has weakened pretty substantially. Now, that being said, remember, last week was a huge week of earnings reports. And remember, once they get past their earnings reports, all of those companies start coming out from under their blackout period where they can start buying their own stock back. And corporate buybacks is a big part of this market anymore. So watch that carefully here. We could start seeing breadth increasing here in the market. But one of the things we don't want to see if you're a bull is we don't want to see that breadth increasing on a sell wave in the market. That's where some panic could start to come in if we start to pull back. And I can just imagine, you could probably imagine from these elevated areas in the market, if the selling starts, everyone will probably run for the door pretty quickly to protect capital, and we could move quickly in a downside move. So just be prepared when we're so bullish that we can continue to keep that going. We can keep the party going for a lot longer, and all of the earnings that we have this week could certainly help that. But just be a little bit careful just in case we happen to trip and stumble and start looking to the downside. Breadth is a concern right now. We're rising on very low breadth. And we can see that in some of those internals where we've had more stocks selling than moving up. We've even seen that VIX holding a little bit steady in there, a little bit higher. So watch that careful. Let's take a look at some stocks. Let's take a look at our economic calendar here for today. Our economic calendar, a pretty light day today, but we will want to pay attention to some of the data out here. We've got stress panel interview here today, so kind of keep that. Powell will be speaking, and we'll want to be already has, and we'll want to be paying attention to that. We've got PMI composite final. We've got an ISM services number here today, and then we've got some bond auctions. And remember, now that we're past the FOMC, we're going to get a slew of Fed speakers. So we're going to start with Bostic today, and as you can see throughout the week, we are full of Fed speakers that just can't, they're just going to get out there and tell us what they think about rates, and that can create some significant volatility. As you can see, Tuesday there's not much in the calendar except Fed speak. On Wednesday we've got international trade, and we're going to have petroleum status and a whole bunch more Fed speak. On Thursday, jobless claims. That one may start being a problem for us here. We're going to have to watch that closely. Natural gas and a Fed balance sheet, and then the Baker Hughes rig count on Friday. So overall, pretty light week, except for all of the Fed pontification that will be happening out there. Let's take a look at our earnings calendar here for today. Now, our earnings calendar, we've got several notables here to be paying attention to, and they could be potentially good market moving reports. Now, if you want to catch the full list, make sure you click the link just below the title of the video. That'll take you back to the morning blog where you can catch that full list. But stocks that we'll want to be paying attention to here today, like AMG will be reporting. We're going to hear from AMKR today. We're going to hear from CBT, and CAT will be reporting today. Looks like CAT's getting a nice pop here this morning on that earnings report. Looking good. We're going to hear from Estee Lauder. Big pop here going this morning on Estee Lauder. We're going to hear from KRC. We've got on semiconductor reporting. We're going to hear from PLTR. We're going to hear from SSD. We've got MCD that will be reporting today as well. So just kind of keep an eye on these reports. They can be certainly market moving, and we've got quite a busy week of earnings this week. Remember, if you want that full list, click that link just below the title of the video. Let's take a look at some stocks that could be setting up for today. But before we do that, guys, just remember that if you would like to do me a favor, you could click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. If you find these videos to be useful or helpful, if you guys could do me that favor, that would be leave that brief comment. That helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that, and thank you for the patience with my little surgery situation here that I'm going to have to deal with. So thank you and forgive me for not being around on Friday. If you want to continue to help out the channel, share these videos out on the social media feed, and just a big shout out to everyone who supports the channel through the Buy Me a Coffee link just below the title of the video. Let's take a look at some of these charts setting up, and remember, folks, these are not recommendations to buy or sell any security. Do your own due diligence. Be very, very careful here in the market, and just be a little bit cautious here. Try not to over trade this market as we try to figure out how much higher we can drive this market up. First off, let's take a look at ctlt. ctlt could be reporting on 2.9, but look at that thing surge here this morning. I had this on that list. You guys know that I talked about it on Thursday. On Friday, that thing popped, and it is going hot this morning. So hopefully some of you are in that. I know I'm not, but hopefully some of you are in that and doing well on ctlt, looking very, very good at the moment. If we take a look at Verizon continues to rest in this beautiful little consolidating pattern, and this is a bullish consolidation because we're holding above a support level, resting in this pattern. Keep an eye on Verizon. Still looks pretty darn likely that could rest out here toward the trend, and we would look for that next opportunity to the upside. Now, just because I drew it like that doesn't mean it won't have more volatility in it. What we've seen here lately is sometimes we just do something like that and then we take off to the upside. But if you'll notice right here in this pattern on Verizon, there's that move. We just come right out to trend and then we start moving on higher. So keep an eye on Verizon. I would also keep an eye on that AT&T. It shot straight up here into this next resistance level of the chart, and now resting, pulling back. If it can hold this support, hold a higher low in here someplace, look for that next opportunity for AT&T. Looking good in some of these telecommunication stocks out there. Take a look at Walmart. Walmart obviously is going to be doing a split and keeping those prices affordable for folks. I wish more companies would think about doing that so that they can be more available to the general public. But looking across here, you can see Walmart looking really good. Now that's going to be coming into its earnings on 2/20. And you guys know I've been talking about this for a while, alerting right in here. Just a nice run there in Walmart. Congrats to those that are in it. Looking good. I would look for a little rest or pullback now in that chart. Maybe wait and see how that continues to develop. Watch that one closely. Take a look at Shop. Now Shop, I've been talking about this one for a while. Resting in this nice little consolidating move. Obviously after a big rally to the upside, breaking through a pretty significant level of price resistance in the chart and holding it nicely in here. So watch for that opportunity. It may be pushing on through here today. Good one to be keeping an eye on. You might want to keep an eye on DOCU. Now this one failed that pattern. Notice we consolidated over here to trend, drop down, any rally back in here right now, I would watch for that possibility of a short. If we fail at that resistance in there, I would watch for that next opportunity to maybe take that one short. It's not looking very good overall after failing trend and failing support. Take a look at some of these uranium plays in here. Now, a lot of volatility up in here, but as you can see, CCJ showing quite a little bit of bullishness in here, pushing on through. We've got some support in the chart that could hold, and as we rest back and we try to deal with this resistance up here, let me go to a weekly. I just want to show you that we still have that possibility that we could stretch up here, testing all-time highs here in CCJ, and with the seemingly short supply right now on uranium, there's every reason to believe that could continue to go higher, particularly if the dollar were to weaken. Let's take a look at UEC. Now, UEC is what I have a little bit of bias in because I'm holding that chart, and that's looking pretty good. Little pop and drop here in the pre-market going on. We'll want to watch that, but any resting consolidation across in here would, I think, set up that next opportunity in that stock. Let's take a look at a few other places. Now, MDT has been one of those stocks that kind of surprised me for a long time because MDT is a medical surgical company. They take advantage of a lot of AI, and this has been really struggling to get going here. If you'll notice that possibility that we may finally be breaking this downtrend, popping through and a hold in here, I would look for that opportunity in MDT. Now, you do want to pay attention. It's going to report on 220, but something to definitely pay attention to here because we're trying to break through to the upside. You know, I was looking at a lot of stocks this weekend. Take a look at palladium. Palladium has just been pounded to the downside here, and I want you to notice, I'm going to go to a weekly. This is an incredible area of potential price support in palladium. So let's watch that closely. Now, I would say when we look at the daily, it's not ready for prime time yet. You know, we're just trying to decide, are we going to hold that support? So I'm not in any way trying to suggest that anyone should be working to predict that this is going to bounce off of here. Please don't do that. But if we were to break that downtrend and actually hold a higher low, then we got something to think about there, and that could be a pretty good opportunity to the upside. Let's take just a look at one more thing here in the market. If we take a look at TLT, TLT surged up here to the upside, but you notice with our bond yields rising pretty sharply here today, TLT pulling back. So I would be a little bit careful and cautious here. If you're holding TLT, if you haven't taken some profits on it, it might be time. I'm going to continue to hold this, and I'm going to continue to hedge this for the longer run. But there is a little bit of concern here with those bond yields running up so strongly. So watch that closely. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Thank you so much for listening and being here. I do truly appreciate it. Be careful, be safe. I'll see you right back here bright and early Tuesday morning. Have a great day, everyone.